Here we go. $500 call on Google. We talked about that early on, and it's a very narrow range spread between the what's going on in the pit with the public at 10.5 on the high side, 970 on the low. I'm going to give a bid based on that 3-minute distribution bar. I'm going to put bids down here at 930, 950 by 970. However, if I hold that bid at that double bottom, then Google would go higher. Right now, I'm going to give a 930 bid. I'm giving an 860 bid. I'm giving a 930 entry. However, if I don't break price action, I'm not going to go down to my 930, 1050 being a high. That give me a $1.20 wholesale bid. Here, I told you get the other one of their 100 contracts, 50, 50, 50, 50, 50. All right, that's 200 in those prices. All right, here we go. We got a double bottom action. Double bottom action right here on a 369. We're going to see if they slide that bid on the equity. Here it is right now. We're going to see here that high was put in. That's what populates this $500 call. And we've got double bottom 9-minute price action. We started with that gap. We start right here in the first 9 minutes at the 9-minute price action. That's not moving this a lot. But 134.295 shares traded. Big deal. So less price movement here. Something's going to happen here. We're going to keep our bid on the options below the market until we can figure out what this 9-minute price action. If they slide that bid here, they're going to slide that bid here and take that bid down, and we're going to get bidded in wholesale. Okay, and this is how it's done. We're going to see if they slip the bid right here. 20 by 55, bid and ask. Look at it, 35 pennies wide. 20 by 55, 71 off, 18, 70, 48. We're all the way around the clock right here. Here you go, 25 by 72. Look at how wide. Bid and ask. Penny bid and ask. Penny bid. There it is. Here it is on a 9-minute. Started with a opening gap. There it is there. Here it is over here, 990 by 1010. Let's take a look. We're going to fade it in price action. Come back down in here. Keep these contracts out below the marketplace. Here's the slide that bid. We're working on a 12 on the open. 39 pennies, 6:39 a.m. Pacific Standard Time. 31 by 63. Over 30 pennies wide between the bid and ask. Here we go. There's that gap. He's got to double slide that bid. Keep those contracts below the floor. Just keep sticking with it. I've got the Dow printing 29, 26 on that gap. Remember, they got the big numbers coming out tomorrow on Friday morning about your wonderful U.S. economy and its great unemployment structure. So we're going to have lower volume in the tape. Here's the bid. There's not enough price action in the call. We don't have enough volume to populate enough price action over here. And the 500, we remain below the bid. Once again, if we can hold price action, we got a 12-minute gap sequence. 12 minutes holding the price action. Right, there's the high. There's the low. All he's got to do is spin that bid. He's got to walk over here, take out that ask, and sell it down. That can happen in a heartbeat. We're 12 minutes into the tape. Here we go. We're doing a double part series on the opening bell. Right here and now. 3-minute chart, price action. Google, $500 call, price action, narrow range. Bids are at 930. Bid and ask 42 by 68. One of two things are going to happen. This side of the tape called the bid jumps in front and they sell it down. We'll come down. That would take this price down. We'd get in. Watch. He slid that bid right here on that 3-minute bar. Take a look at the level 2 action. Buyer and seller. Watch. If the seller is getting taken out by the person who acts like they're a buyer and they jump down and they sell down that bid, that's how you get that SMF. Slide that bid. 930 on the bid over here. 970 by 10. I got a 30 penny bid and ask. Narrowed down to 20. I got a 70 by 10 here. $500 call. They slid that bid, made that low right there. That's another low that was made in the actual equity. Okay? And here we go. Narrow range volume. All you have on the tape, you got 18 highs and you got 5 lows. Right here, right now. What you're looking for is where that price action's made. There is also in our mathematical formulas, which are price action. think of it that way, is that we have a 3, 6, 9, 12. We got a 15-minute trying to hold off of that bottom from this initial gap. And you can see the small movement in the call contracts because this volume is weak on the open. Here we go. We got that price action movement right here. In the same video, I talked about if you can't break that price, there's a 3, there's a 6, there's the buy, there's the entry, there's the move. That's a 3, that's a 6, and this firm was built on the 369. Right here it is. Okay, so once again, light volume. The thing that I like going on over here in the $500 call is that they're still in premium. We held that price action that we talked about at 970. This is the Google call. So now I'm going to give new bids. I'm going to start bids on the lighter end of the contract at $10.10. So when Google does come back intraday, market's only been open 18 minutes. We'll put the prices down below there and we'll start building the $500 call. And as we do build this position, we'll be buying the other side of the market, meaning that we'll go down below the market and buy a 490 put just in case they gap the thing down on the jobs number tomorrow morning, that we're going to be making money and not being caught. Isn't that true, Mark? Anyway, here's that move. I just want everyone to see on the opening bell here that you had a 3 and a 6. There's the 9. Price action was made right here. And I'll have Brian Plain pull up the formulas and you'll see it.